This is the Real Estate Investing Abundance Podcast. I'm your host, Dr. Allen. I know you're excited to get into today's show, but I have a very exciting announcement to share with you before moving to the show. We've just launched a complimentary and comprehensive webinar that, among other things, shows you how to legally use passive real estate investing to reduce your taxes, recession-proof your nest egg, and take the sting out of inflation. If you are curious to learn more, go to stevetucker.com/webinar. It is complimentary and only takes a couple of minutes of your time. Once again, that is stevetucker.com/webinar. I'll see you in the webinar. Enjoy today's show. Hello, enlightened investors. Welcome back to Real Estate Investing Abundance. I'm your host, Dr. Allen. Thank you so much for being with us again today. We really do appreciate our audience, and so we always look forward to being with you. And we're going to take a look at making the jump, going from a W-2 job to real estate entrepreneur. And with us today is Jennifer Morimoto, and she is an ex-corporate brand marketer turned entrepreneur and fierce financial literacy advocate. She is the co-founder and COO of Madison Investing, and she sits on the board of the Bay Area Financial Education Foundation. And I just discovered today that Jennifer is the wife of a guest we've had on a couple of times, Spencer, and we are so glad to have Jennifer with us today. So Jennifer, take us into the show and share a memorable experience from your formative years that helped you to be who you are today.
Absolutely. Thank you so much for having me, Alan. It's a pleasure to talk to you today. So I would say a formative experience that I've had was right after college. I started working at a company. I got a job, and that's what I thought I was supposed to do. And so I got a job. I worked at a corporation, and I found out I was really good at working at a corporation. And I spent the next 15 years climbing the corporate ladder and being promoted again and again and getting rewarded for my hard work. And I spent 15 years doing that. And that corporate experience taught me that there is definitely a life outside of that. Just not a lot of people are going to talk about it. So that's why I love talking to you and on shows like this, because it's really important to get the message out there that there's other ways of living.
Yeah. Well, when did you and Spencer get connected in that 15 years?
It was slightly before. We actually met in college. We worked together on campus on a campus job.
Oh, okay. And if I remember correctly, you have two children, I think both of them sons. Is that correct?
That's correct.
That's correct. And so somewhere along the line during that corporate career, you were having children as well as working in a full-time corporate position. How was that, having children and working very hard in those hard-driving corporate positions?
It was an incredible challenge. So becoming a parent is an incredible challenge in and of itself, but working at a corporate job that demanded more than 40 hours a week, commuting, we live in the Bay Area, so the commute was awful. It was just a lot of traffic. It was really difficult to get into the office. So a lot of your day was spent in a car or on public transportation. So, having children and being in a company that maybe didn't have the same values that you did as a family, it was always a conflict. And we were always chasing time. We would come home late at night, exhausted. We didn't have our full selves to bring to the children. And that was just something we felt we were going to constantly be chasing.
Mm-hmm. Well, I expect that was probably part of your decision that it is time to leave the safety net of the corporate environment. So tell us what all went into that. I mean, it couldn't have been an easy decision because there is just a lot of security in corporate positions. So what all was behind that decision that, it's time to make this transition?
Yeah, time freedom was definitely a key component of it. I know that you talk a lot about time freedom on your podcast, and you definitely feel caught up in the rat race when you're in a corporate job like that and you have a family. You have a lot of different things pulling you in different directions. And I would say we are really hungry to get more time in our lives. But concurrently, we also started looking at our finances and thinking about retirement. We're in our 30s. We were thinking, well, retirement is a long ways down the future, but let's just start learning more about this. And so we started focusing on financial literacy for ourselves, so personal finance for us. And what really was an aha for me was when I started taking a deeper look into my 401k and realizing, okay, what's the strategy behind this? So I'm going to dump as much money as possible into my 401k. And what's the end game? So realizing that I would be taxed later on my 401k when it was time to withdraw, and realizing the goal was to have a lower tax burden when that time came, because the expectation is that you would have less income. That didn't really sit well with me, thinking about, well, I don't really want less income when I'm retired. I want to really be able to enjoy my time and enjoy my money. And so something about that equation just really didn't add up. And so I started really thinking about how I need to get my money working harder for me. And that's what really shifted me into thinking about investing. And that's when we started investing in real estate.
Tell us about those first endeavors into real estate. Were both of you still employed in the corporation when you first started investing?
Yeah, definitely. So we were still working a ton, raising our family, and then we took on the additional effort into financial literacy and learning about investing, and then started investing in real estate personally. So we bought a home, a second home close by, and we started renting it out. So that was our learning curve. We got into the single family home rental game, and we got that duplex, and it was okay. We spent a lot of money to get it, and the cash flow returns were very low. And so we did a little math and we said, okay, well, we need to keep going. We need to rent out more houses. But we can't do that in California because it's very expensive. So let's look elsewhere. So that's when we started looking at Kansas City, Missouri, and we bought a couple homes there. Even though we had property managers, it was so much of a time suck for us. There was so many problems, especially in Kansas City, where there's winter and things kept breaking or freezing and tenants kept leaving. And we just didn't expect it to be such an active job. We thought it was going to be passive income and we would have our money work for us. But even with property managers, there were just tons of decisions to make every single day. So on top of our careers and our family, the equation was breaking. We were even losing even more time that we had.
That's not an unusual story for real estate investors. So many of us start in that single family endeavor. And I mean, that's where I started. And I actually started house hacking, which when I was started investing in real estate, there was no such term as house hacking, but that's what I was doing. And I had broken some single family houses down into multifamily houses. And it was working okay, but it was no way to scale. I ran into the same experiences that you ran into. So you realize that one of your big objectives was time freedom, and this was not providing it. So what happened next?
So then we realized, like you were saying, this is no way to scale. So we realized we do want more doors. We want more renters. And the only way to get there was to go with multifamily. When we started learning about multifamily and all the benefits of scale, we realized that we weren't necessarily cut out to become full GPs of a large commercial property. We wanted to invest in commercial properties because we saw the value of that scale. And so that's when we started learning about real estate syndications and real estate funds in the private equity world. And we became LPs and then started investing in syndications and funds. And that was a pivotal moment for us. We really started shifting into thinking about scale, thinking about risk a lot differently, thinking about leverage a lot differently. And so the more we learned, the more we invested. And we really developed an investment thesis around this. So from there, we had a lot of friends and family start asking, okay, well, what are you investing in? And we started surrounding ourselves with people who wanted to talk more about real estate investing, and the conversations just took off organically. When we started having friends and family ask if they could invest alongside us, we thought that was a really interesting proposition. And that's how our company, Madison Investing, was born. And we started having people invest alongside us, and we would bring them opportunities that we were investing in and LPs, and they would invest directly with the sponsors as well.
So that's a huge leap there from single family to multifamily investing, and you chose to do so as a limited partner. And you also talked about GPs, or general partners. So for people who aren't familiar with the lingo, just explain to us what's a limited partner, what's a general partner.
Right. So when you have a general partner, they're the ones that are in charge of managing the commercial property as a business. So they're in charge of acquiring, they're in charge of property management, whether they do that themselves or they hire a third party, they're in charge of the overarching business. LPs will come in as limited partners, and they will put up their capital to help acquire the business or the commercial property. And so that's what we were doing as LPs. We were providing capital, which was derived from our corporate careers, and we were investing in these apartment buildings or storage facilities and different types of assets.
Well, how did you, going in as a limited partner, you're not in the decision-making capacity. And so you have to have the capacity going in as a limited partner. You have to be able to let go of control. And you were single family operators, you were in control of the whole entire thing. So how did you make that decision that I can let go of the control to get my time freedom and to get the scalability of investments? How were you able to do that?
Yeah, great question. So I think a really important part in any investing when you're an LP is that you need to do your due diligence, and you need to understand the deal you're actually putting your money in. So you have to underwrite the deal. You have to do all of the things to analyze the deal to make sure you understand what the GP is proposing. If you get past that point, you need to also understand who this GP partner is. It's really important to establish a relationship and get to know them and understand what their background is. Have they done this before? Have they faced any adversity when they did it? How did they climb out of it? All of those questions are really important when you're vetting who you're going to be investing with. And so I would say, as long as you do all of the measuring up front, twice, 3 times, 4 times, then you will only have to cut once. And from there, you can start trusting that your money is in good hands.
Good answer there. Well, you had talked about you had developed an investment thesis. And once developing this investment thesis, then things started developing organically. Friends and family started asking you about your investments. So what is your investment thesis?
So we really love multifamily and storage. We think that these assets are really important. Multifamily, specifically housing. We believe that there's not enough housing in America, and it's not being built fast enough that we'll ever see an end to this supply demand issue. So multifamily is something that is very, very important to our thesis. We also focus on regions of the country. We invest all across the country, and we look at high growth markets where there's high growth in population and high growth in jobs and job diversity. So these are all different areas that we look at when we're looking at the partner and where their strong suit, where their market specialty is. We want to see that they're in these markets that are growing fast. And then it comes down to the partner. Like I said, it's really vetting that partner and making sure that they're going to be solid to represent your investment.
Yeah. Well, those certainly are very important things in terms of it growing and developing organically. Well, you first of all had to be having some kind of conversation in order for it to start growing organically, but you also had to have had some initial success there in order to attract this organic growth. So, can you tell us about these first investments and why it was that it actually was attracting friends and family?
Yeah, absolutely. So I think the challenge for us is we were learning a completely new field. This was real estate investing was very new to us. Spencer, my husband, he grew up in a broker household. His father was a realtor, and so he was exposed to residential. But when you start thinking about real estate investing, it's a very, very, very different world. And so we were really immersing ourselves in all of the knowledge as much as possible. Dare I say, we became a little obsessed. And with that obsession came just constant conversation. It was all we could think about and all that we could talk about on our spare time. And so that's what I kind of mean by organically. We were constantly talking about it. We were constantly surrounding ourselves with people who wanted to talk about it. And it really helped us grow our learning and develop our investment thesis faster. And it was through those conversations that people really agreed with our investment thesis. They also really related to our situation because they were likely going through the same thing. They were, had young children, had a corporate career, were trying to figure out what the next step was, really wanted time freedom, and looking also to the future, to retirement and what that meant to them. So all of these things that were involved with our story really, I think, made an impression with our network and instilled trust that we were values aligned and that we were going after learning about investing in these asset classes with just so much passion and excitement. So I think it was a galvanizing force that really drove their investment.
Yeah. Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Well, it's always nice to see things growing organically like that and naturally, really, from some really good experiences. But obviously, you had mentioned the aspect of trust. I think that is such a critical factor in terms of investing. So talking about financial literacy, and you had mentioned 401ks, and that you realized that just wasn't going to work for you like it is promised that it would. So what, in terms of financial literacy, what is really the big message you want to get out there to people who are in the same situation that you were in?
Yeah, definitely. And that's a great question because I think about that question very differently depending on who the audience is. So if there are people that are similar to my background where they have a nest egg, they've been investing in their corporate career so that they've built their income and now they're thinking about how can I passively deploy it. I would say do not farm out your financial literacy to someone else. That is too far important of a topic that you can just hand over the reins to someone else, no matter what their credentials are. You have to have an understanding of what you want your money to do. So you have to establish your own goals and you have to understand the vehicles that you're putting them in. I would say that is a priority. So I know a lot of people, they want to be passive about it all. Do not be passive about your financial literacy.
Well, that is a good suggestion. A lot of members in our audience are actually fulfilled professionals that are working in higher education and in various different healthcare professions and other kinds of professions that actually bring them a great deal of fulfillment. And unlike you, they're not necessarily looking to leave those professions, but they are looking for passive streams of income. And I know that really from my own personal experiences of working in a profession that I found a great deal of fulfillment in, I really put that financial literacy way on the back burner and did not really until probably 20 years ago, didn't really pay any attention to that. I would even shorten that window to probably about 10 years ago that I really started looking into that, which is really way too late in life to do that. And there's a lot of reasons for that. I was, I thought I was in good shape in terms of retirement and had healthcare benefits and all of those things that come with working within institutional organizations, although those benefits are diminishing as time goes on. But when I was in that, they were good benefits, and they looked like good things to be looking forward to that. So I wasn't concerned about that financial literacy. What would you say to somebody like me?
I would ask you, and this is similar to how a lot of conversations kick off, what are your goals? What do you see in 20 years from now? Or what do you see in retirement? And are you set up to get there? I think people often don't connect the two, or they think that they have a lot of runway, that they don't have to think about that now. But the truth is, especially with healthcare professionals, a lot of people have student debt that's clawing away at them, or they have high insurance premiums that they have to pay. There's a lot of things that are happening now that are going to affect you down the line. So you need to understand where you're going to understand the strategies to get you there. So I would say, number one, what are your goals? And then number two is what's your pathway to those goals? And I think often when you kind of start looking things like that and people start critically thinking about their strategies that they have in place, they realize quickly that they don't have enough to get them to where they want to go.
Yeah, I think those are excellent questions. And I never really asked myself those questions. I just assumed a lot. I just assumed that everything was going to be okay and work out just fine. And I wish that somebody had just set me down and really asked me those questions in a way that was direct enough that I really started thinking about it. And I would have done a whole lot differently than what I did if I had just really sat down and looked at the direction that things were going. Well, wonderful, wonderful advice, Jennifer. And thank you for helping us to explore these questions. So take a moment here to share with us about Madison Investing and how it is you operate, and what opportunities do you have for our investors to work alongside you.
Yeah, absolutely. So Madison Investing, again, it's Spencer Hilligoss is my husband and my co-founder. So we started the company with the intention of helping investors invest directly with multifamily and storage and other commercial investing opportunities. So we have an investment group. It's similar to a club where if you're in it, you get to see the deals that we have vetted. We've personally placed our money with these sponsors previously. So that's part of our vetting is, as an LP, I crucially examine everything. And then I put my money personally with the sponsor to see how they do and how they communicate and how they operate. And then we bring the offerings to our group and open them up, and investors can place that capital directly with those operators, and we serve as that introduction point.
Wonderful. That's a very great endeavor that you are involved in with that, to be able to bring your network of investors into investors that you have already vetted. Because I think that is the most challenging thing for passive investors, is first of all finding places to invest, and then even if they find the places, knowing whether or not they can trust that those investments are going to return the projected investments that the general partners are putting out there.
Yeah.
Uh, Jennifer, let's go into our last segment here and tell us one of your most difficult setbacks and how you came through that and what did you learn from that?
There's so many trials and tribulations through the years, so it's hard to pick just one. But I think one story that I love to talk about is really running a business with your best friend and life partner. Spencer is first off a wonderful partner to have in life and in business, but having really hard conversations where you disagree fundamentally on a professional related issue is really hard to have if you're just in a company and you're talking to a coworker. It's even harder to have when it's someone you love and you care about. And so that's been, I'd say, one of my proudest accomplishments is running a business, a successful business with my best friend and partner, and really learning about each other on a whole new level. And I have so much respect for what he does, and it's turned out to be such a wonderful partnership.
Yes, those kind of conversations can be extraordinarily difficult, and I think many of us, because they're so difficult, we just don't have them. So just to delve a little bit deeper into that, how have you learned to deal with the difficult conversations?
Yeah, that's a great question. I actually have a book recommendation, which is Crucial Conversations. It's something that I read in my corporate career, which is how to have difficult conversations, especially when the stakes are high. And I think lucky for Spencer and I is we have a base layer of respect for each other. And so it always helps us approach the conversation with compassion, but we're also very driven, vocal people that have an opinion. And so I think with that base layer of respect, we can communicate respectfully and clearly and with curiosity. I am curious even when he doesn't agree with me, why he doesn't, and I want to see things from his perspective. So having hard conversations is a really important skill to have. And I don't think we're done learning with this topic, but we're always willing to try.
Yeah, there's always going to be new difficult dilemmas to deal with there. But I think you hit the nail on the head when you said that you have a curiosity about his opinions, and I expect he has the same for yours. And I'm sure that's a key to the facilitation of those conversations. Well, what are three good things that you have experienced in the last 24 hours?
When I think about good things, I think about just the goodness that comes from my children and seeing them grow and learn and face conflict themselves. So my youngest just got a pair of roller skates. He's 6, and roller skating is terrifying for anyone who's learning, being on wheels like that. And so seeing him fall down and get up is definitely, it leaves an impression on a parent. It leaves an impression on anyone. And so I have seen him fall in and get up countless times over the last couple of days. And it's terrifying, but it's filled with so much goodness. So that's the first thing that comes to my mind.
And what are two more?
2 more. Okay, so my oldest one, he's 9, and he's dealing with some friendship conflicts and trying to figure out, who are the people he wants to surround himself around, and what does he like about these interpersonal relationships. So I love seeing them grow up and deal with these conflicts. It's so personal, but these are life lessons that you really carry forward. And I love to be a sounding board for him. And I try not to give too much advice. I try to just listen to ideas that he has and just hear him work through it. And I can remember going through a lot of conflict like that when I was younger, but I think those interpersonal conflicts are just the lessons that you'll keep learning over and over as you grow older. And let's see, the third good thing is I would say I have been working really closely with a nonprofit. You mentioned it earlier. It's BAFF, or Bay Area Financial Education Foundation. And we help high school students get financial literacy through a series of modules that we had. So we just had a volunteer kickoff event, and we're getting ready to really, just tackle 2023-2024 school year with financial literacy. And the enthusiasm that these volunteers have to teach other people about personal finance, to teach teenagers about it, it really gets me energized, and I'm really glad to be working with this organization.
Wow, that does sound fulfilling and exciting there. Well, how are you putting your success as an investor and entrepreneur to work to create universal well-being?
Yeah, definitely through my work through BAFF and financial literacy, but I would say also in mentoring other women. So I have a few mentorships happening right now, and I think that women who are launching their own companies, or they're just trying to figure out their professional lives and balancing it with their personal lives and what the in-between means, I think I really value those conversations and being a sounding board for people who are trying to sort through it. And I think at the end of the day, everybody is seeking a balance, they're seeking time, they're seeking enjoyment, and they want to thrive. And what I want to encourage people to do is do not lose that as a North Star. You deserve to thrive. So continue to work the problem and figure out how to set yourself up for success to get there. I think there's a lot of us that can live with complacency and will forget, to prioritize themselves and what they want. And so in all of my mentorships, I really encourage people to continue to push.
And finally, imagine you've come to the end of your life and you lay on your deathbed. What do you look back on with your greatest sense of joy and fulfillment?
I think there's not one singular thing that I would say. I think the answer to that question is I had enough. I had enough in my life, and I was content. I always think about the word happiness, and that's always something that I've never really related to wanting to drive towards happiness. I've always wanted to drive towards balance and contentment. And I think if I, on my deathbed, can be content with my life and feel like that was enough, then I will have known that it was a positive journey.
Lots of wisdom in that. Yes, happiness is very transient, but contentment can be a lifelong thing. So thank you so much, Jennifer, for being with us. Pleasure talking with you. And enlightened investors, thank you so much for being with us today. We really value your presence with us, and I hope you will take a moment to like, share, and subscribe. And also, we would love to hear from you, so please leave us a comment. And if you could take a moment, we would really appreciate it if you would go to Apple Podcasts and leave us a rating and a review. Until next time, live abundantly. Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to steedtalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to steedtalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steed Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.